Well, generally, I think with the way the global economy has been going, with the level of uncertainty that there has been reduced lending to the private sector. Kenya's been a little bit different. We've made a lot of strides in terms of the affordable housing space. Even if you look at the positive developments made with the growth of institutional developers in the space, such as International Housing Solutions, there's a number of other developers, Tilisi, Mivida, Superior Homes, everyone either invested in or looking at the space. It means that there's continuous opportunity for development because there's now institutional capital that is being invested. At the same time, you now see with the growth of products and initiatives such as the Kenya Mortgage Refinance Company has really helped to spur uptake of affordable housing by providing single-digit mortgages, which really weren't there before. At the same time, when you look at what is affordable, it's really taking people away from what they were paying in as rent, providing them with affordable mortgages through KMRC, and being able to provide them with an opportunity to own their home over a long period. Now, there's still a lot of work that needs to be done there, but already a lot of steps have been taken towards defining the affordable product. At the moment, anywhere between sort of your sub 10 million shilling product, and coming there and then seeing, okay, I can start with a studio, I can then move up to a 1-bedroom, a 2-bedroom, and a 3-bedroom. There's different definitions, whether it's social housing, whether it's affordable housing, but through KMRC, steps are being made slowly towards formalizing and understanding the entire sector. I think financiers such as Absa are doing a really good job. If you look across the market, there's a lot of banks now that are quite focused on the mortgage product, being able to come in from buyers, even at the offtake level, get them signed up, give them their offer letters, and have them ready for when the unit comes into the market. Again, products such as KMRC play such a huge role in this. It's really spurred mortgage growth. I think more than 5,000 mortgages, probably the fastest mortgage growth that we've seen over the last decade, all because of initiatives such as this. And this, again, is primarily being driven by the banking sector. There are other initiatives that need to come into place. We need to see a deepening of our capital markets. There need to be initiatives such as tenant purchase schemes. We have growth of the sort of other lending avenues such as your SACCOs, which are now coming into the market as well. So when you combine all of these, because Kenya is not almost like a traditional borrowing just from the banking sector, we will see more growth across the entire space.
Yeah, so I think that's been a growing challenge, and every day there's new regulations or new taxes that come up in the country, and I think that's really been the pain point for many mortgage takers. But as Absa, I think we've come to understand that, and we're trying to see how we can partner up with our retail mortgage team to come up with more innovative solutions around that. And so one of the things that we've developed in-house, which is actually rolled out, which is proven to be quite successful, is the off-plan mortgage structure. And so what that does is allows mortgage buyers to actually get access to their houses before they've finished paying their facility. And so what that does is, it provides more flexible terms to take into consideration the higher taxes, whether it means, longer tenors, preferred interest rates through our partnership with KMRC. That's just to name a couple, but there are more initiatives that we are trying to roll out to grow the mortgage space at Absa.
The top line, the orange line in that graphic on your left, is expenditure, how much your business is spending. And the bottom line there, and there's already a hint in this because it's the bottom line, the bottom line is how much revenue you're taking in. Now, as a business, you will know that some years are better than others, right? Not every year is profitable. Some years you need to invest going forward. Some years the stars just align against you. But if you go to a bank with a business model that says your last 7 or 8 or 10 years looked like that, it's going to be a tricky conversation, right? You don't need to put that in your diary for an hour, I don't think. You're going to free up some of your time for traffic.